Visitors from the troika, that's the European Union, the European Central Bank and the IMF, are in Lisbon today to check whether Portugal is keeping to its scheduled reforms. The country's cut state spending, it's made progress on privatising some state assets, but a deepening recession and a shortfall in tax revenues is threatening to derail its plans. The troika will have to be satisfied that Portugal is on track before releasing the next tranche of its €78 billion bailout. Manuel Rodrigues is a lecturer in finance at the AESE Business School in Lisbon. Good morning to you.
Good morning.
What is the update from Portugal? We've sort of forgotten about it, and we like to think that they've been getting on with it and making the cuts and sort of slowly struggling through. But what are the troika likely to find?
The troika will look at three specific dimensions. The first one is speaking on structural reforms, which means about basically increasing the competitiveness outlook of the Portuguese economy.
When people say structural reforms and everyone talks about that, what does that actually mean? Does that mean changing labour laws? Does it mean, what exactly do you mean by that?
It means flexibilizing labour laws, making it easier for companies to hire, making it easier for companies, when not necessary, to be able to decrease their labour force. We are speaking about also streamlining the judicial system, about making the rental market more competitive, about changing the competition law, so about making the Portuguese economy more responsible to economic change and more competitive.
So how are they doing so far? They're saying that they have made some progress in privatising state assets. Now, that does surprise me, because when you've got the future of the euro in doubt and some countries may fall out of it, who would want to buy something denominated in euros when tomorrow it might be denominated in something else?
So the privatization agenda has been the biggest success of the program. It has been much beyond the expectation. Portugal has been able to privatize its main energy company, EDP. It has already privatized the energy grid. And what we have been looking, surprisingly, is a very strong confidence of strategic investors on these assets. The assets have been not only sold at a higher level than it was initially expected, but we have assisted to several bids. It means several international firms interested on those companies. Let's look at Energies of Portugal. There were three interested companies proposing bids. The Asian or the China Three Gorges, which ended up buying the position, a home company, the German player, and a Brazilian one. So there has been a very strong interest from strategic investors, which shows basically a strong confidence on the Portuguese recovery.
OK, so far so good. However, the economy is forecast to contract by 3% this year. Will that give them the sufficient tax revenue to actually balance the books, or will the troika give them some more time? They'll be looking at Greece. Greece are asking for a couple more years. If Greece get that, will Portugal be asking for the same?
So there's a national sentiment in Portugal, very strong, where Portugal doesn't want to have more time or more money. Portuguese people, they have the feeling that there is a right momentum to achieve these targets, and asking more time is actually making more difficult the program to be successful.
Now, there is a big bond repayment due next September of €9.7 billion. At the moment, the bailout funds aren't enough to cover that. So there is a question mark about whether they will need more money to cover that this time next year.
Yes, so by mid next year, Portugal needs to be issuing longer maturity bonds. Basically, Portugal has always been tapping the market since the bailout with short maturity bonds, which means with less than 1 year, and now with up to 18 months issuances. The focus was a country in a bailout cannot be out of the markets. It needs to be tapping the market to make the re-entering in longer maturities easier. What we have assisted is since January, the longer maturity bonds trading in secondary markets for Portugal, they have been increasing their face value very significant, which shows that the credit risk perception for Portugal has been decreasing.
Okay.
If we keep at this pace, there's a Portugal will most probably be able to fund itself in the longer maturity markets by mid next year.
Okay, Manuel Rodrigues, lecturer in finance at AESE in Lisbon. Thank you very much indeed.